Alright, as we enter a whole new week of trade, let's explore the forces that have developed over the weekend that are likely to influence our market in trade this week. Beginning with, as always, the United States, stock futures rose slightly on Sunday as investors tried to build momentum on last week's performance. The Dow futures traded 68 points higher, or 0.3% higher, while the S&P futures advanced 0.2% and the Nasdaq futures advanced 0.2% as well. The S&P 500 and the Dow rose 1.3% and 2.3% respectively last week for their third straight weekly gain. Coming down to Asia, it's been a bit of a mixed bag this morning. Investors are currently awaiting the release of the Chinese benchmark lending rate, which might be tweaked. In anticipation of this news, the Nikkei has risen 0.19%, with some gains seen in the tech sector. Exports data, however, for the month of June that is now out for Japan has shown a very steep fall, 26.2% reduction from last year's figure. And this is worse than a poll that was conducted by Reuters, which anticipated a fall of maybe 25%. Now, imports fell 14.4% in Japan as well, with expectations of a 16.8% decline according to Reuters. So there you have a glimpse of positive news. Now the S&P and ASX 200 in Australia declined 0.23% this morning so far, led by a fall in financials. So the major banks there, Commonwealth Bank of Australia, Westpac, etc. would have been leading the fall over there. We're now set to look at the EU region as well. The last cues we have out of here are for Friday. So we do know there's currently talks of a round 2 stimulus, and that's what the EU leaders are debating. So markets are a bit cautious right now, waiting to hear exactly what the stimulus output will be going forward. But despite all this, the Stoxx 600, the Stoxx 600, which is the key index over there, was hovering just above the flat line at close on Friday. And over here, your auto sector rebounded, jumping around 1.5%, while your banks fell 1%. Let's do a quick commodity check on oil and gold. Brent crude futures have fallen 24 cents to $43.13 a barrel, and WTI crude futures have fallen 16 cents to $40.59 a barrel. So let's remember now, the world economies are constantly weighing supply cuts and demand. So these are the two forces that are really affecting oil prices. The OPEC has agreed to cut supply, which is what initially supported prices. We're now learning that the OPEC is going to start ramping up production from next month onwards. However, if you look at the cases in the US, which are showing no sign of slowing down, it seems like oil demand may remain suppressed for a while. So you could see these prices a bit volatile going forward as the recovery gets delayed, and it'll be interesting to see how they react. Coming back to gold, which has just been shining off the charts. Gold jumped on Friday, posting its 6th weekly consecutive gain. Spot gold rose 0.7% to $1,810 per ounce, and US gold futures were up 0.7% at $1,811 per ounce. So gold is looking really strong. Doesn't look like that momentum is going to reverse anytime soon, given the fact that equity markets are fairly choppy and that cases aren't slowing down globally.